U.S. stocks just flipped in the red. I'm here with Matt Cheslock as we and the floor is trying to figure out what just happened. Matt, the latest thing I read is that the U.S. was likely not to extend this waiver with Huawei right after China said that they're going to buy more soybeans and pork, which, they desperately need. What do you think is going on?
Listen, we had some comments out of Trump that were kind of positive today, saying that we're making some real progress and headway in the trade discussions. And then we come out, if this headline is true, that's not a good sign for what we're hearing. So I think this market is really conflicted about the he said, she said type matters that are going on, and you're seeing the market really react to it. In fact, we're starting to get some more out of maybe the whistleblower thing out of the Ukraine as well. So if you put those two things together right now, there's not a lot of credibility in the White House right now.
One of the first times that we're seeing the market actually latch on to something politically associated. Usually we kind of just put it aside and then we continue higher.
Yeah, history would probably say the impeachment proceedings, if they were to occur, aren't that big of a deal for the markets. However, if the rest of Congress gets into their inactive mode as a reaction to impeachment, then that's really what's going to stifle this market. If we don't get anything as far as gun control and infrastructure and the Mexico, Canada, U.S. pact, all of this stuff will play into part in the markets. And there's a lot of different sectors that are looking for all of this type of news to help them in the third and fourth quarter.
And we do have some IPOs today. We have one, Peloton. We saw WeWork completely crumble and fall apart. Matt, what do you think about the whole IPO landscape for 2019?
What's interesting, valuations are now being questioned as far as IPOs go. Peloton this morning looked like it was going to be a positive opening. Now it looks like it's flipped completely. So, if they're going to try to follow, I know the Netflix model is what's been mentioned as far as, monthly subscriptions to their service. How long can that continue? How long will people actually do it? Most people I know that buy treadmills and bikes use them for 3 or 4 months, and then they're, clothes hangers after that. So it's interesting to see if they can continue. We saw them last quarter have a huge losses piled up. A lot of it was due to getting ready for the IPO, obviously. But if those losses kind of continue like some of the other IPOs that we've seen, they have not been, well received by the marketplace. I think people are starting to realize that huge losses aren't easily made up.
Is it the internals? Is it the company's fault, or is it that this is what happens? We're in a landscape of easy money policy right around the world that allows companies, let's say like SoftBank, just throw money to anyone, regardless of valuation.
Yeah, I think as a venture capitalist, that's what you're looking to do, right? That's what they've always done, and some have been huge home runs. But now we're starting to get more people that are looking into them because there are fewer and fewer of these massive deals taking place. So when they do, the question is, there's a lot of voting concerns about what management holds. That's been one that's been negatively weighing on it. The other is the valuation concerns. Now, obviously, these valuations have been so good for so long, but now we actually have to put them to market. They can't sustain that valuation and that growth going forward. So that's what we're seeing as far as some of these IPOs recently, and they've been massive IPOs as well.
Exactly. And like you said, with Peloton, I guess metaphorically it's burning out right now, but we'll see if it can recover. Matt, I hope you have a nice weekend, and thanks for joining me at the New York Stock Exchange. That's Matt Cheslock with Virtu Financial. Have a nice weekend.
Yeah, you too, Voss.